Good morning, traders. It's Monday, the 3rd of October, 2016. It's about 7:53 a.m. I'm starting a little bit early today. I have a commitment for my kids in just a short while, so I wanted to get this going. Um, this is another Trader Bite, early nourishment for your trading mind. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember that the opinions that I'm sharing are my own and are subject to change without notice. Nothing major driving us overnight. Germany's closed today for German Day of Unity, and overall the news flow overnight has not been very heavy. The key players also is still Deutsche Bank. Uh, as far as risk capital, the market's allocating to safety this morning. It looks like crude oil is strong, but pretty much everything else is weak other than gold, the Japanese yen, the US dollar, the US bond. So that tells me that money's moving towards safety, and that's the mood that the market is in this morning. As far as what we're expecting for this week, remember this is Monday, the first day of the week. We look ahead at what is coming this week, and there is a lot on deck. Starting with today, we're looking for U.S. manufacturing PMI at 8:45 Central, 9:45 Eastern. In fact, I'll stick with Eastern time, although I like to stick with exchange time, normally my time, Chicago time, but let's just do Eastern from now on. It's too complicated. U.S. manufacturing PMI at 9:45, expecting 51.4. Construction spending at 10, expecting 0.3, and ISM manufacturing expecting 50.4, also at 10. And then we have ECB Speaker Mersch at noon Eastern. The big day, there are a couple big days this week. Just to set the mood for what we have for this week. Tomorrow we have a couple of ECB speakers, one at 4:30 in the morning Eastern and 7 in the morning Eastern. But at 8:05 a.m. we have Fed Speaker Lacker speaking about economic outlook. And so that may be a mover there. But Wednesday is a big day. German services PMI as well as many other numbers. We get ADP employment at 8:15 on Wednesday and trade balance at 8:30. Services PMI at 9:45. Durable goods at 10. And factory orders as well as ISM non-manufacturing at 10. We get crude oil inventories, gasoline and distillates as well at 10:30. And then we have Fed Speaker Kashkari at 9:30, and Fed Speaker Lacker again at 1 o'clock on Wednesday. Thursday, German construction PMI, and then from the not much. Thursday's the lightest day of the week. We get the the Challenger job cuts at 7:30 in the morning Eastern for September. But Friday's the big day. Friday's the big kahuna. Not only do we get a slew of numbers from the UK as far as trade balance, industrial production, manufacturing production, but we also get unemployment and non-farm payrolls on Friday. The expectation so far is 175,000. That comes out at 8:30. The unemployment rate is expected to be 4.9%. At 10 o'clock on Friday, we get wholesale trade and consumer credit at 3 p.m. But also on Friday, we get another small parade of Fed speakers. At 10:30, we get Fed Speaker Fisher. 12:45, we get Fed Speaker Mester. And then at 3 o'clock, we get Fed Speaker George. And then at 4 o'clock, right at the cash close, we get Fed Speaker Brainard. Okay, so that's how things are shaping up. Wednesday, a few numbers today, but Wednesday and Friday are pretty heavy, and we need to just keep that in mind. Let's quickly switch gears here to what we expected on Friday as far as the primary hypothesis. Friday was opening in the middle of Thursday's range, and there is no value on Thursday. The market essentially went into almost a trend mode. We have a multiple distribution profile from Thursday, and so we there's not much we can take out of value. But we the expectation was for an open auction for a drop down to the 46, 2146 area, and then establishing a base right here. And then the overall trend for Friday is expected to be higher. Okay. And that's really what we got. And then I warned on Friday that there may be a strong spill on the close. Some of you asked about how I predicted that. It's not really a prediction. I frankly I just don't have a crystal ball. I keep saying the same thing over and over again. This is not about predicting the future. This is about laying out plans and letting the market tell us what what it wants to do, and then when it does, we find ourselves in better alignment when we have pre-planned what the market could do. The reason I predicted or I was looking for sell-off on the close is because throughout the week we've pretty much rallied, moved back up to the upper distribution, but there's a lot of there are a lot of factors that are causing investors to be jittery, and with Deutsche Bank, the fines from Deutsche Bank, and the issues that they're having with hedge funds pulling out of Deutsche Bank and stuff. You would not want to, as an investor, you would not want to hold that risk through the weekend. A lot can happen over the weekend. So I expected liquidation on the close, and we did get that. I'll show that in a second. The secondary hypothesis was a test higher failure, push down, and then sideways. We did not get this plan. We got typo 1 instead. Here's what the market looked like. We open up, test down. We never get to the market's too strong. We never close the prior day's gap close. We never touch the prior day's point of control. We open in an open auction, and then we break lower, and this looked pretty good for a short against mid for a rotation or continuation down. That didn't happen. The market just fiddled around and create what looks like a push pull to mid right here, which I was not able to get on, and then a continuation, reversal, and then corrective to the upside, and hypo 1 is in effect from that point on. So from about 9 o'clock onwards, we start looking for hypo 1. Hypo 1's key target was the double top at 65.75 right here. That was the double top. I called that a weak high and a double top from Thursday, and I was looking for that as a key target. It did get taken right there. And then the extended target is, of course, 2170. That's a key area up top to look for. Then the market turned over and sold off into the close. What we ended up with is a normal variation day with the point of control outside of the IB, a fair amount of strength. The point of control from the prior day was moved up, so we have a higher high, higher low, higher value with a higher point of control. So overall, the market's showing some strength. And so on the close, though, the selling was very precipitous, was very strong, and you could see that the bigger size on Delta was positive pretty much from the morning. You can see it only dipped twice below zero, but for most of the day, the size was positive, and it also started selling in the afternoon. So this is as was expected. So you can see here a pretty good delta on the sell side on pretty good volume. Very unusual volume. The normal volume is down here at about 100,000 on the close, and it traded 225,000. So, or something like that. Let's see. Normally it's 119,000. Traded 276,000 on the close. That was very deliberate selling on the close on Friday. And if you look at my index chart, my percent change chart from the open, you can see that all of the selling is occurring in equities but there's only a minor blip up in the treasuries. Gold remained near the lows. Crude remained near the lows. The 10 years stayed just as they were. Money was just moving out of equities. I don't know where it was going, but it was definitely coming out of across the board. You could see all the sectors. The lines are all the five sectors, the five key sectors of the S&P, and selling was occurring there. So I need to move on. Uh, on the weekly, I discussed this last week. God, my voice. I discussed this last week here. This chart. This is a weekly chart that's merged together. Oop. Oh, what's going on here? Oh, okay. This is a weekly chart that's been merged together right here. This is last week, and you can see that last week we spent it in between the lower distribution and the heavy upper distribution that started August 8th, and we are stuck in the middle. Here goes that song again in my head, the classic. But the idea is that we do play in here for a while, but the ultimate goal is to get up into the 2172.75 and then start moving to the other side for new highs. Okay, so that's what I'm looking at. I'm still on that plan unless we break below. That's really the expectation here. Sorry, I keep having to clear my throat. Mic clicking again. Sorry about that. A new mic's on the way. This is the monthly. This is the monthly chart. Overall, you can see that September did something very significant, and it started one time framing down. We put in a lower high and a lower low for the month of September, and as I marked um, on the flex levels, this 2110.50 becomes a really important level for one time framing. It's marked on your chart in pink and red as a key level. A retest, a drop from where we were. This is where we finished in September. If we drop down here, uh, we may see a very quick drop if we push through that 2110, because this confirms one time framing down or the beginning of a bigger trend downwards if we take that out. The opposite is also true. If we push through the high of September, it puts the high of August or the all-time high in line, in check, and we start to move up towards that. So this September is essentially on a monthly chart is putting in a top. It has created a lower low. So what we have is what's called a prime bar on the monthly chart, and this becomes a pivot bar, an important pivot bar for the month. It's a doji. Essentially, August started here and closed here, and then here's September putting in a lower low. Although it also starts lower and closes lower. So on a monthly time frame, it's showing some weakness. We'll see how that goes. But I expect October to be fairly more volatile, and I expect a lot more movement this month than we've seen over the last couple months. There's a lot at stake this month, essentially. Okay, I need to wrap this up. Today, overnight. Well, let's look at the overnight. We can't. We got to consider the Globex session. Overnight, the profile was very tame. Overnight, we traded right in here. We had a Gaussian profile. We had a completely balanced overnight session, and then we started to sell off in the last hour or so. Or how long has it? I've been on my desk for about 2 hours, so about an hour and 45 minutes it started to sell off, and has come way down. I did not expect that. We're taking back a lot of what we did on Friday, And it like I said, money is moving towards safety this morning. Crude oil is now down for the day, unchanged to down, and so is gold, and so is the Bund. It just doesn't look very healthy this morning. So that changes my hypotheses that were prepared last night. This shows a fair amount of weakness overall. The volume overnight because of the German holiday is light, but we're opening. If we stay up here in the next 22 minutes, we're opening in a lower distribution. The primary expectation, if we do, is an open auction and push higher. The key figure to test is this 2158 75, 2159. If it cannot hold this 2159, expect a rotation down. 2146 and also this MC point of control become your key targets. And then the expectation is it attempts to get back into the range, and then it pushes down to 2141. That'll be your hypo one right there. This is the most likely pattern for this morning. Open in range, so we look for an open auction. Push higher into the 2158, 59 area. If sellers step in at this point, we're looking for 46 and lower, down to 41 or so. That's your primary. The secondary, the secondary is to open, test lower, look for a test of the prior day's low, bounce back in, go into a corrective move, push to yesterday's point of control, and then if it takes, and that's a big if it takes back the 59, then it's likely to push through to our key target 2170.75. Those are your key ideas for the day. I'll leave you with that. Good luck, and I'll catch you tomorrow morning. Take care.